Hmm. Sorry. Good morning. Sorry. Yeah, there's probably no sound there for a sec. No big deal. No biggie. Anyone watching GLD this morning? Nice little Dipper Magoo? No, not really. Ooh, ouch. Yikes. I own pretty good amount of gold and silver. I've been debating if I need to start actually selling it or not. I've held it for many years, so it's kind of one of those things where it's like you have grown somewhat attached to the investment because it's been so long and it's performed so well. So you're like, is it time? Is it not? I was kind of hoping they would run it up into +3, +4. I don't know. I don't know what to do. And that's like our government's probably going to keep printing money, so it's probably never really going to go down, 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 down for forever, because obviously we're just going to print more money, which is going to make it more expensive to buy an ounce of gold. Sometimes you hate investing because then you have to play these stupid mind games, and it's like, So I don't know what to do, is my question. But also not knowing what to do, or just kind of being like, well, just let it do whatever. It led me to holding for years and years and years, and here we are at $400 or $4,000 an ounce. So it's kind of like, yeah, don't know what to do. I mean, obviously, I wouldn't be, not that like I wouldn't be a buyer up here. I mean, I'm not a buyer up here. If anything, I'd probably be, if you're looking for like timing of markets, maybe. I mean, I'd be more inclined to be selling. I want to see it get up to 4,500 an ounce to 5,000 and some chain an ounce. But yeah, I'm looking at, it's 380. So yeah, it's $3,860 an ounce or whatever. I don't know. I don't really know. I was really hoping we would be able to get it all the way up into +3, +4 standard deviation, but I don't know if we'll be able to do that because silver is actually... honestly, silver might be a little ahead of schedule in that regard. Well, we just hit +2 standard deviation, so we're already trading pretty far away from the mean. So, honestly, dude, I don't know. I have no idea what to do with that. I've been on holding that stuff for a year since, like, I don't even know when. Let's see. 2018's. That vertical line. Pretty much this is where it started becoming interesting to me. Let me put on a weekly chart right there. Because for me, I saw this bull flag in the market, this, like, longer term. So we corrected, and then right here, this is your WW reversal, in my opinion. And then that would be like sort of a bull flag WW. And so that's basically where I was interested in the gold markets. Also because it's just gold, it's precious metals, government's printing money. So there was other things behind. It wasn't like, oh, I looked at a bull flag and I'm like, this is the greatest investment of my life. Absolutely not. That means nothing. And then here we are. And now if we were to trade up to, say, this area, so anywhere from 500 to like right there would be +3. That's not a 3. I don't know what that is. +4. STD, which sounds terrible, but that's standard deviation. So I was hoping we'd get up there and get like a really euphoric market. It would be all over the headlines, and then I would dump it probably myself because I don't know. You know, sometimes you ask yourself, like, what's the point of investing? The point of investing is to make money. So then it's like, well, you've made money now. So, like, and that's always the thing. It's like, well, do I hold? Do I not hold? It's like, really, the objective's to make money at the end of the day. And now that I've done that, it's like, why am I sitting here being unhappy with the money I've made? You know, because then it's like, behind the scenes, you know exactly why this is up. A, it's a precious metal. B, your government, you know, just loves to print money. So it's like, unless that stops, then theoretically, you would still see gold go up in the long term, right? But everything has to cycle. It has to go up. It has to go down. I mean, look at what happened in the financial crisis, right? So basically, gold ran up. So in 2007, right, to 2009. So we peaked. So financial crisis happened in 2007 to 2008. We were rolling. 2009 to 2011 area, I think, was the bottom of the market on the stock market, and then the top came. So the top of gold essentially came at pretty much the bottom of the stock market. So when the stock market crashed and bottomed is when gold pretty much topped, right? We have gold flying through the roof, markets flying through the roof, Bitcoin has been flying through the roof, everything's flying through the roof, right? So it's just one of those, it's kind of like, I have no clue. So, I don't know what to do. I've made a lot of money and now I don't want to sell it, and because there's so many other outside factors that are like, yes, as much as I think my technical analysis is great, and yes, it is at times, and yes, I can predict things pretty well, I cannot predict that far out. Is the government going to print another $1 trillion, right? Or does the United States go into a recession, then gold pumps for another 4 years and blows straight through 5,000 an ounce, right? Is this just a pre-anticipation run of what's to come for the markets? And so maybe the markets are so forward-looking on gold right now that we've run the market up, you know, too soon. You know, there's so many things I'm thinking about right now, and I really can't understand it in a way that gives me conviction to make a decisive action in this moment. So I've just been sitting, which has led me to $4,000 an ounce. You know, so it's like basically sitting and doing nothing has worked. Is that going to continue working? I have no idea. But yes, I own physical gold, physical silver, paper gold, paper silver. I own all various forms. Now, there's not various, it's only like 2 forms. It's either physical or paper, right? So, good morning, Lacey. Good morning, guys. Yeah, just an FYI. Like we said, we're moving over our new website over these next couple days, so Yeah, I probably won't be streaming on YouTube quite as much as I have been in the future as we make a move to our site. But I still plan to do some streams, maybe some weekend stuff, maybe just like a little hour here or there. Might be a midday recap kind of thing. I don't know. I haven't really figured it out. But the objective is to continue doing some sort of streaming here on YouTube. You know, probably not going to be during the heat of the moment anymore like we've been doing. It'll probably be either, you know, earlier in the pre-markets, or it's going to be, you know, maybe, 12 o'clock, like a 1 p.m. sort of thing. Granted, the market's super slow during then, but it would just be a time to basically recap all the good stuff, arguably, you know. So we'll see how that all fits in the future. So on and so forth. Spicy F1 spicy fish. That's probably what that is. You know, there's a lot of ways you could try to go about it. Honestly, fund futures, like funding futures prop firms, like it really, it's a double-edged sword for sure. Granted, they are really good, but also kind of crappy. There's so much good about them and so much kind of bad about them in a way. But at the end of the day, it's a pretty good thing in the sense that, like, for example, Top Step. I don't know all these other prop firms. I know they've blown up over the past couple years, and so there's so many that I've never even used. I don't know all the intricacies of them, but one thing I do know is that the barrier to entry is pretty low in terms of cost. Now, a couple $100 is still a couple $100. I don't like spending a couple $100 on just random stuff myself. So like Top Step, I think theirs is like $50, and they have some higher ones. But either way, you could spend $50, get control of 50,000 fake dollars theoretically. If you do successful enough, then yeah, you can make some money, right? So here's the difference, right? I could take 50 grand of my own dollars and put it in an account and lose it all, right? Or I could take $50 and buy a Top Step account, and they'll give me 50 fake $1,000 to trade with. And if I trade those 50 fake $1,000 well enough and pass their rules, then I could make whatever. So essentially, let's just say you spend 50, you do well enough and pass their combines or whatever, and then you get to their funded. Let's say you make $1,000. You just took 50 to 1,000, but you risked only 50, right? And you still had the control of $50,000 in terms of playing within the market. Now, if you went and had a futures account and you put $50 in it, you wouldn't even be able to buy a contract, right? So you basically would not be able to flip that money in any sort of meaningful way, right? In order to buy the same amount of contracts on Top Step's fake money, you would need $50,000 real money, right? And that $50,000 real money could relate to the same amount of profit that you would make regardless if it was your own 50K or if it was your 50 fake dollars from Top Step. So you can basically use 50 fake dollars and make the same amount of profit that you would using 50,000 real dollars. But you only have to spend $50 and then pass their sort of stipulations. At the end of the day, prop firms are all basically a scheme in a way. They really are not there to help you. It's a business. They're there to make money. All right. That's really just the end of the day. Now, in a sense, they are there to help you because, yeah, I get access to $50,000. I can trade and I can do all these things. So there's a lot of benefits, but really they're hopeful that you just lose and you keep buying the combines. Let's be realistic. That should probably be the number one thing advertised on the top of all prop firm companies if they were truthful and honest about what their business approach really is. Granted, that might be a hard sell to the public, so that's probably why they don't do it, right? Just like back in the day, smoking's cool, you look hot, yada, yada, yada. Kind of harder to sell cigarettes when it's like, we're about to kill you. You're going to die, actually. You're going to smell like poop, and then you're going to die a horrible death if you smoke for too long forever and you get cancer. Yeah, maybe I won't smoke it. Maybe I'm all right. We go into top step. Hey, we will fund you. You can trade, and you might be able to make money. But the reality is, we want you to lose, and we want you to lose as most as possible. Even though we say we're here to help you get funded, and we fund traders, and we're great, but we really just want you all to lose as much money as possible, and then spend as much money as possible on all of these accounts. Please do that. Now, if you came to their website and that was the first thing you saw, maybe not, right? So, that's the gig that's going on there. So that's just what it is, right? So to be honest, your best bet is still probably prop firms if you don't have a bunch of money and you want to try trading futures. If you don't want to go that route and you've done enough practicing and you feel like it's time to jump into the market, then your best route would be using a cash account if you can afford even a couple grand, right? Because you could still trade every single day if you manage your money properly, which is don't put too much money towards one trade or else you won't have any more money to put on a trade for the day. If you take a $5,000 account, put $2,000 on this stock, and then you put $3,000 on this stock, you've done 2 trades, and now your capital is used up for that day until the settlement period, blah, 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 blah. So really the best route for most beginners, I would say nowadays, after doing this for so long, is you should probably just use, but again, it depends, right? What are you buying and what are you selling? You cannot really do much with futures in a cash account unless, you have a ton of money. I don't even think you can do futures in cash account because you need to have margin. So yeah, you probably can't even do that. Like I said, so if you want to trade futures, you're going to have a lot of money in margin accounts. And if you want to trade futures, you can go prop firm, very low cost, low barrier to entry, but their objective is you actually lose. And they do come with some stipulations. Or it's use a cash account and manage your money in a way that you always have money to turn and burn every single day and throughout the week. And you do that by not putting down too much money on any one given position, right? I have a smaller Roth IRA that I've actually been trading this year, and it's because I've never been able to use a Roth IRA for the past however many years, but over the past couple years with rental properties and our company not doing as well and some of my trading lacking, my income has dropped over these past couple years, unfortunately, and with some rental expenses and renovations and washing income, now I am below the threshold that the law would allow me to use a Roth IRA. So I haven't, for the longest time, I didn't have a Roth IRA. I had 401ks and all this stuff. And then I wasn't able to contribute or open a Roth and use one from my knowledge. And things may have changed since then because my income level was too high. And then as I lost some money trading and then renovated some properties and then incomes dropped from my company a bit, I went below that threshold. So then I was able to start using the tax benefits of a Roth IRA account. So just over these past 2 years, I put some money into a Roth IRA account, and you can only max out whatever's $6,500 a year. All right, so I've put some money towards a Roth IRA, and I've been trading the small Roth IRA account for some fun on the side because it's tax-free, which I never got to do in the first place because, like I already stated. So that's an account where it's still below 25K, but I have to manage the money properly in a way that I can't put too much towards one trade, or else if something else pops up today, I won't be able to trade it, or if something pops up tomorrow, I might not be able to trade it. So in that sense, when you're forced to manage your money in a way so that you can keep using your money, you avoid going too heavy on something, arguably, and you start to manage your account properly in that regard. So through my Roth IRA, I usually am only going 1, 2 to 5% on any play because I know that I could do. It's very unlikely that there would be so many plays per day that I would use my entire account's capital if I'm only using anywhere from 1 to 5% capital of that account on any given play. There's just, I'm not going to see them all. I'm not going to catch them all. I could spend all that money, but nowadays there's just, with what's going on, I wouldn't be able to find that many setups that quickly and probably be involving myself in the right way to burn through all that money. There has been days where I've done it because I've seen a setup that I thought was really good. And I'm like, you know what? This one I'll hit a little harder. And I have spent more than 5%. So there has been days where that's happened, but it's very, very rare because normally I'm just never in the perfect moment to be like, this is an absolute banger and I'm going to win this, like most likely guaranteed. So I'll just throw money on it. That I don't run into that as often. So anyways, that would be the story. Go cash account. You can trade stocks, you can trade ETFs, etc. You can't trade futures, so you're going to be limited on profit potential in that regard. But you get to manage your own money. And there's no one behind the scenes rooting for you to lose. It's just you and your account and your money, right? So that's something to think about as you go forward, I guess. I mean, dude, that's honestly what I would say to you is just open up a small cash account. I don't even care if it's $500. I don't even care if it's $100. And then just start trading the SPX trading SPY and trading a 3x leverage ETF. And you just follow the market above and below the SMA like I do. That is pretty common for a lot of my positions. Like I'm always pretty much keeping some money in that Roth. I mean, obviously on any given day to add long this market or I usually don't short because it's a Roth IRA. So you can't short. And because it's a Roth with no margin for the moment. So you can't really short unless you buy long an inverse ETF. So I do short the market sometimes, but it's really a long purchase on an inverse when I'm trading the Roth IRA account. So as it relates to a Roth IRA account, you can get 3x the return of the market by using a 3x leverage ETF. And if you follow this system here, you'll be on the right side of the market almost every single day. I know it sounds stupid when you say it, but it's true. Every day, every week, you'll be on the right side. You're never wrong in that regard. You can be wrong about a trade and still lose a trade, but you're never going to be wrong about the market. The market will be neutral to bearish below. It will be bullish above. That's just how it works, right? So by starting here, you'll pretty much learn how the largest globally traded ETF in the world moves pretty much every single day. The more you follow it, I've been following this thing for years, you'll start to be able to pretty much predict news. We just did it on Bitcoin, right? For those that were watching the stream the other day or yesterday, whatever, we pretty much, so this is what happened. So just a couple days ago, I have all the videos on YouTube. It doesn't even matter. We said buy here. Actually, this is how it actually happened. We pretty much said, hey guys, market's going to sell to there. When it goes there, you're going to buy here. When you buy here, you're going to go up to here, and then you're going to take profit right there. So basically, this sell move, this bottom, and this long move, and this top were all mapped off days, weeks ahead of time to a degree, right? So if I know the market, when I say I know, I mean it's know with pretty good conviction and high degree the market's going to go here, and then it's going to bounce, and then it's going to go here. What's that mean? We know that the market's going to stop at 103 and it's going to go to about 110 and 11. If that happens, what do you think the news is going to say? Bitcoin recovers back to 110K, 111K, which is exactly what happened. So yesterday when Bitcoin hit 110,000, I'm like, you know what? I haven't even looked at the news, but I can already assume what's going to happen. Someone out there is going to be happy that it went up to 110K and they're going to go, oh, cheering on Bitcoin gains. Bitcoin recovers back to 110K. It's like, obviously, right? So as you get better at understanding markets, you can actually start to understand news cycles because it's just human behavior, right? People report news on what they see. They don't report news on what's to come, right? So, because they would look silly because they'd be wrong all the time, right? Because in order to even predict a market and get even relatively close with, some degree of consistency is nearly impossible, really is. And somehow to say I'm blessed to have even come to where I am now, I don't even know how. And as far as trade, and that's the other thing too, is like I am pretty damn good at analyzing a market, but then as it relates to trading, my trading does not meet my analysis as good. And that's because of the emotional factor. I wish I was a robot. I'd probably be worth trillions by now, but I'm not. So, there's a perfect example of, being able to read a market really well and then your performance still doesn't stack up because of psychological factors, right? So you can take it from me. I am probably a picture perfect example of, years of experience and years of learning that's led me to basically tell you where Bitcoin's going to go before it goes there 3 moves ahead of time. Literally, that was 3 moves ahead of time. Down, long, basically down. So how do you predict down, the target of the sell move, the long of the bottom of the sell move, the top of the current long, and then the start of a daily resistance level weeks ahead of time? That's crazy. Somehow I got lucky enough to do it. I don't know how, really, to be honest. Maybe it was all those prayers that I said to God. I said, hey, God, maybe trading and being a multimillionaire from trading and profits was never really meant to be. Maybe the true goal was to be one of the best mentors and teachers and really try to solve these markets as best I can, and hopefully that information will reside in another individual and it takes them to that level. I'm still going to try to get back to that level when I was crushing and making 50Ks a day or whatever, but things change. So, I don't know if it was the prayers, and maybe the prayers are getting it. I have no idea, but maybe it is. All glory to God in that sense, if so, and even if not so, it's all glory to him anyways. But so when you start to be in the markets long enough, you start to really see it for what it is, right? So when you start to be able to predict these moves a little ahead of time, then yeah, you pretty much know what the news is going to say, because you know how humans act. What do humans do, especially when it's news? They just turn and burn news articles, right? On whatever they can and whatever's going on today, right? I forgot what they said. They said it was like maybe dude, I don't even know. Because I don't even pay attention. Granted, I probably should, because I probably have even more edge, but anyways, like during this whole drop, I don't even know what they said. It said it was like China or something. So it's like 2 weeks ago, we're like, hey guys, market's going to sell to here, right? And as it's selling all the way down, they're like, oh, it's China's fault. So how is it that we predict the market's going to go to here, then it's going to bounce here, and then it's going to go here, and it can have resistance there, all without reading the reasons why the internet and the news told me so, right? So if you're doing all of that without reading any of the news, which tells you why something's happening, then is the news even true? No. Those are things that are just happening. They're just happening, right? And maybe it has a little effect here and there to the price, but if you're doing that without ever reading the news, then it's not the news, right? Exactly. That's the way I perceive it. So enough of me tooting my horn about predicting markets, but also not making enough money off the back of my own skill. Maybe I should be a little more humble in that regard, in which I will try to be in that regard. So yeah, pretty much all we've come to the conclusion is what you should do is use a cash account, use the SPY, track the open, high, low, close, 30-minute, 50 SMA system. You will start to predict and be on the right side of the market, more than 90% of the entire market. And if you follow it for enough years, you'll start to predict the news cycles before they happen. And then you'll start to giggle, because you're going to be like, damn, this is everything Connor said a couple years ago. So, and Lacey says it there, same for sure. It really, it's an emotional thing, right? And it's a constant game of, am I right? Am I wrong? Am I right? Am I wrong? Right? And then it's also, well, like, how long will it take for me to be right? How long will it take for me to confirm I'm wrong, right? And do I want to sit through that emotional tug and pull game? That's when you're like, you know what? Actually, I've made enough profit. I think it's good. I'll take a little off here. And then what happens? It keeps going, and it goes right to your target. And you're like, I'm mentally challenged. I don't understand why I do this to myself. I see it happen all the time. I do this all the time. I predict it way, and then you kind of fumble it, Not all the time, but it happens. And you're just like, what is wrong with me, right? So that's the emotional side of the game. That's why those that learn to shut their emotion off tend to do the best, right? But I also have a very analytical ADHD reverse engineering brain. So I love to just nitpick things and pull them apart and put them back together 1,000 different ways until something makes sense. It's the only way I can do that. That's probably why I become a little lethal on some of these things. I'll tell you the market's going to go up, and it pretty much goes up. I'll tell you it's going to go down, it pretty much goes down. I say Bitcoin's going to go here, it pretty much goes there. That's just the years of picking apart these things. And then wanting to share them with everyone, right? Because that's the goal, right? If everyone can make money, that's great. If everyone can learn something that really benefits them, that's great. So, cheers. Lacy. I can manage to write up 5 perfect trades and manage to screw them all up, right? Yeah, and that's another thing too, right? Say there's a trade you have, and sometimes the fills are just not there, right? So it's the market doing its scheme. That's what I call it, right? Sometimes I'll have a perfect trade, like getting ready, I'll buy some futures here, whatever. I'm going to buy some equity, and the market just like 1 minute candles so fast, and you're like, well, there goes my perfect entry, and now what? Now I'm going to chase up half the candle, and it's like, you know what I mean? And so that's what I call the market scheming, right? The market has always got a scheme somewhere. And sometimes it will just be market moves so quick, you don't get a fill, or they're going to front run your position or whatever, right? Or it just the weird nuances of the market sometimes. So enough of this chat, but yeah, we'll cover Bitcoin real quick. I know we're just drawing a bunch of random stuff. So we did this exactly yesterday, right? So this is all what you're seeing right now is hindsight. What we did was all foresight, which was anchor VWAP here, anchor VWAP to this high, and then pretty much told you what's going to happen. You're going to bounce here, and you're going to go there. You can only go higher when you get acceptance above, because that's just the rules. So you'd lock profit if you took the trade recommendation that I suggested whoever knows how long ago. And you would lock here. Why would you sell there in terms of a trading environment? Because you do not know, nor do I know for sure if we're going to break this level or is it going to use it as resistance, right? So there you go. There's your resistance. So in terms of why did you, close there, that's why. Because this could very well be what? An attempted daily lower high level. The levels that we're looking at are the levels that can continue lower lows or lower highs, right? We're not picking random things. We're picking great things. So yeah, is it going to lower high here? Don't know. We'll find out, right? And so sure enough, what did you get just yesterday, right? You had the market on Bitcoin or whatever roll up into your daily VWAP resistance, which is right there, and it rolls down. Now what? Now it's probably, I haven't even checked this morning, but if you watch, I think yesterday's video, we said basically one of two things can happen from here. Let's delete this. What time is it? 9:39. Cool. Don't even care. One check. I gotta go peek at the market. We're in a buy signal, so ultimately, I'm just looking for the market to keep going up. I'm not even reading the market right now. I'm just looking at this Bitcoin stuff. But yeah, so as far as Bitcoin goes, like one of two things can really happen, right? What was that? It was either going to go up to the daily VWAP, right? And it's going to break out, or what? Or it's going to pull back. Again, markets can only go up and they can only go down. So if you're not breaking out the current daily VWAP resistance, then you're going to pull back. And where are you going to pull back to? Generally speaking, the volume-weighted average prices of the lows, which typically we don't anchor red candles. I am in this instance, but first we would look where? On this candle? So let me anchor right here. This would be the candle you'd anchor to, this one here, right? And or this low one, which in this instance, it doesn't really look like a whole lot. It just looks like this split. So then you would say, okay, our current daily VWAP support over-under is right about here to arguably, one second, trading view is being stupid, there. So this is our pullback target right there, this box. So yesterday we pretty much said you have two options, right? You have daily VWAP on the high and daily VWAP on the low. If Bitcoin does not break out and go, it pulls back. Where does it pull back to? About there. And there's your pullback. Now granted, we kind of shied it. We didn't get the low either way. Like, that's the zone. You'd pull back to there. So now you see how we're trapping this market from the previous sellers and the current buyers. We're trapping them both here. Now, whoever breaks either this one out or this one down wins, right? In that sense, we already won in the sense that we said short it to here, buy it there, take it to there, and then basically sell here. And now we'll see where we want to go next. Okay? So yeah, we'll go to the market. Now it's pretty straightforward, guys. Like I said, we're in a buy move. I don't know. What's the VIX doing? That's important. Volatility index. Don't know. Not sure. Come on, Thinkorswim. Jeez, oh beady weedies. Going so slow. Yeah, I'm trying to figure out my levels on the VIX. So we're below the 30 minutes, so obviously VIX is in a sell move. VIX isn't above the 15 minutes, so we're not concerned there. VIX might be getting over the 5 minutes. So this is kind of interesting. Again, I don't look at 5 minutes as like a be-all, end-all, but here's a quick quick kind of run through of how you can flip through times really quick to get to what you want. So basically we know unless the VIX is over the 50 SMA and the 30-minute, volatility is not in an uptrend. Now it can bounce and it can go up, but in terms of trend, it's not. So we went into a sell move the other day, which basically tells us the VIX is bearish as long as it's below that SMA, right? But obviously before the VIX can go up, it has to at least be in some uptrend, right? So then we would start going down the list. So 30 would be important to us. 15 minutes, the next important. We're well below that, so we're not in an uptrend on the 15-minute. But what about the 5-minute? Now the 5-minute, see how the 5-minute's starting to get above right now? So this would be an attempt of the 5-minute trying to cross over and turn into an uptrend. Is it legit? Maybe. I do not use 5 minutes as conviction. 5 minutes for me do not convict anything. They can start something. If they do, great. I'll track to progression. But I do not use 5 minutes as conviction for something changing. It could very well lead to change, but it's not consistent enough for me to have conviction that it's guaranteed or strongly it will change something, right? So where would conviction come from? Like maybe if this 5-minute does start an uptrend and that uptrend takes it to a new 15-minute uptrend, and if the 15-minute starts going positive, then I'd be like, yeah, maybe volatility is kind of getting up there, and maybe the markets are kind of starting to get fearful. But until then, just nah. So with that being said, what's up? VIX is kind of doing that 5-minute move. Yeah, and actually probably look at the 10-minute too. Where's the 10-minute? Where is my... I'm always never finding the 10-minute time frame. I just don't get why. And there it is. So this is what we would say next, which is this, is that as far as markets go, algorithms speak and they talk. So what am I reading right now? I'm going to try and think like an algorithm. Well, I see the VIX is bearish below the 30-minute, the 1 hour, blah, blah, blah. We know volatility doesn't really become very fearful unless it's minimum over the 15 to the 30-minute. So this is just a little bit of a counterbalance after an oversold market. That's how I'd read that. And the VIX is trying to get positive over the 15-minute. So I would say if the 5-minute is successful at flipping positive and doing a move, then we would be targeting where? You would be targeting up to the 10-minute, which is right about there. So for me, this would be best case scenario long for the 5-minute algorithm or the 5-minute traders. Best case scenario is to there, right? And right now we know what? Markets only do two things. They go up or they go down. So what can it do? It can only go up and go down. So if the 5-minute would be the breakout level, let's just say, as far as SMA trend, so we'll say 5 minutes to breakout, 10 minutes the next up, you either have to go up to the 10 or you have to do what? Breakout, fail breakout, go back to 5. Then if there's no hold of the 5, then you break down the 5. And everyone buying the 5-minute long just basically loses. That's why I don't look at 5 minutes all that much on the VIX. Why? It's just a little too early of a trend for me, and it doesn't truly signal fear, right? It could lead to something being fearful, but again, this is such an early start of an SMA, like it doesn't work for me. There's times where it works just fine, but it's just not something that I care too much for. But I do read it. And what am I reading? I'm reading the 5 minutes going positive. If the 5-minute uptrend does even last, you'd be looking up at the 10-minute, right? If we do go up to the 10-minute, that means VIX goes up a little bit. We're trading in the 18, so there is still a little fear in the market in terms of where the VIX is priced. But the real volatility trigger only comes when we break that 15-minute and that 30-minute. So we're still in a fearful state of the market with the VIX being a little high, but in terms of volatility trigger, trading action, it's just not there for me like that, right? So anyways, we do have this market pulling, it's pulling back, but let's see what we got going on, eh? So we're going to pop that bad boy in there like that. I need to get a 10 SMA in here too. Like I said, I've been kind of behind the scenes doing a lot of work for our new website stuff, so I'm not as up to speed on the markets and everything this morning. Haven't really looked a whole lot at anything. Just kind of been working and sending emails, so I'm kind of slightly behind on all this. Which again, it doesn't matter. Like there's no FOMO. It's like not like, oh, market opens, I gotta do. Nah, I'm never like that. It's been so long that FOMO doesn't even, don't even know how to spell that. Yeah, so I mean, either way, this market's still positive. We haven't even taken out the sell signal or the buy signal VWAPs. Volatility is not breaking out in a meaningful manner yet, so I'm not scared. I'm not fearful of the market. All it really comes down to now is the market internals. BYND Meta, yeah, I locked in most of that. I closed out that trade. I have nothing left on BYND. Like I said, my plan was to take it up to that 4 hour. If it goes past, whatever. But yeah, BYND worked out really well. Me and Medi had a meeting yesterday after our stream, and we were just kind of throwing ideas back and forth. And then BYND popped up, and I'm like, oh, Medi, like, I just put a position on BYND. Like, this one's got some potential. And so we were just kind of covering that one. But I'll walk through it just because it regardless of me taking a position on it and it working, cool. But this one was a decent setup. Like, that's it. That's why I bought it. It was a decent setup, right? You can already see all the stuff mapped off. This is all the stuff me and Medi were going over yesterday about this setup and why I was going to get long and why I thought it could go where it was going to go, etc. But BYND, obviously everyone knows, fake meat. Maybe not, but anyone from like the COVID days, I feel like that's when this was popular. But you guys know of BYND. BYND is a fake meat company, whatever. So it had a lot of popularity back in the day, so there's that. It still has that sort of that emotional pull to people, where it's a familiar name. It's not just some random penny stock popping up for the day, which it is. This used to be trading in the hundreds, right? So it was a very well-known ticker. So when you have tickers like that in the past, they kind of have that emotional pull to them still, where people are familiar with them, so sometimes they're a little bit more likely to get some activity at times and then be trusted for a run because it just has that old place in people's hearts when it was trading in the hundreds, right? So this is BYND. So we're going to cover this the same way we did the VIX. This is basically the same exact thing. So what do we say about the VIX? Well, forget about the VIX. Let's go into BYND. Like I said, I'm so far not caught. I'm just going over all the stuff. I'm having fun at this point. I'm not really looking for trades, because this one's pretty decent. Yeah, so we're gonna go to a regular trading hours chart. That's what I want. BYND regular trading hours. Here we are. All right. So number one, what do we say about the VIX? Remember we said about the VIX, volatility really picks up if we get acceptance and break out the 30-minute. What time frame are we on right now for BYND? You can't see that. I'm going to pull this down a little bit. Hold on. Let me just... Hold on. I'm going to try and change... I have to change the transform of this. That makes no sense to you guys. Don't worry. Just forget everything I'm saying. Just give me a second. I need to make this thing a little different. Top. This is go down. Like that. There we go. I'm moving. Wait, that's not what I wanted. Size, maybe? I don't know. Don't know. Weird. Maybe it is size, position, size. Well, either way, I'm just gonna freaking drag this down for the moment so you guys can make sure you see the time frames up there. All right, cool. All right, so you can see it's a 30-minute. So same logic, VIX. We're not really crazy about the VIX. We don't really think there's fear. We don't think volatility is really increasing on the VIX too much in a significant way until minimum the 15-minute or the 30-minute start to break. The 15-minute for me is, it's not... The 15-minute, to me, it's so close to the 30-minute, but it's not quite. But I do pay attention to the 15 and the 30-minute. All right, so let's start with the 5-minute, just like we did the VIX. So let's look at the 5-minute here. All right, I had to go back a couple more days here. So we're gonna look at this 5-minute on BYND. So what do we know? So we know that BYND was a 5-minute long there, and then it broke down the 5-minute, and then it's down, and it's down, it's down, and then the 5-minute went positive here, right? Granted, I'm not a big 5-minute positive guy, right? I'm more of like, let's see the 15-minute, let's see the 30-minute, right? So we know the 5-minute goes positive, like, okay, cool. But it's not quite enough for me to be like, oh yeah, this is the one, right? It's still a little too soon. Now let's see the 15-minute. The 15-minute, you can see, does end up getting positive, and it's kind of just grinding this out, right? Okay, sure. It's looking okay. But what about the 30-minute? Then the 30-minute does what? And you can actually see this is pretty much like a flag sort of pattern right below the 30-minute. The 30-minute's where our main concern is at. Does the 30-minute go positive? Yesterday, yes, it goes positive. The volume is insane, right? So we're flipping positive above the key trend that I like. That not I like, that the game, the system, call it the system, because that's what it is. The stock market algorithmic systems love the 30-minute on every stock, every penny stock. The stock market, SPX, you name it, they love it. Okay? There's where your attention goes. This is the system. Okay? This is how we move things. This is how the market and the system function. SMAs. If I get hired at JP Morgan, there's some other things I don't know, but what I do know is if I get hired and they go, hey, Quant, make some cool stuff for us, I'm going to go, okay, what's the universal language in the stock market that everyone knows and can be readable and programmable, and it's all consistent across one chart to another chart, one state to another state, one broker to another broker, one platform to another platform, and one country to another country. Simple moving averages. That's very constant. Your bull flag is not constant. Your head and shoulders pattern is not constant, nor consistent. What's consistent and constant is the SMA calculation. Forever for eternity. This is the system. Okay? Believe it or don't believe it. Or believe it, learn it, and as I said to the gentleman here who's like thinking about just starting trading, you will be on the right side of the market almost every single time. Regardless of profitability or trading a position, your bias and analysis will always be correct in the sense that you're either positive, uptrend, negative, downtrend, no ifs, ands, or buts. Promise. So, what happens? 30-minute goes positive. Yesterday, we break out. Now remember, these are all regular trading hours charts. That's another thing. Why do you think, let me ask you something. Why do you think some of the most popular and some of the most pushed content on the internet, specifically YouTube, always says, make sure you set up your pre-market charts? Guess what? I was a victim of that, and I pushed that content. That's why I know so well, too. I admit I misled people unknowingly, and I am sorry. I don't feel good about some of my earlier content that I unknowingly now know was misleading. And now that I've been in the industry for so long, I understand the system, at least I think I do, pretty well. Not only in the technical side, but in the how the industry likes to operate its game. So, a lot of times you will see content on the internet pushed. Make sure you turn on your pre-market charts. You have to have pre-market. Look for your pre-market high. Look for your pre-market low. Correct? Am I doing well? I am doing very well. Thank you for asking. So, like I said, some of your most commonly published, pushed content on the internet as it regards to setting up your charts, they will tell you to turn on your pre-market data. And if you do that, you will never see this SMA calculation in your life. Your entire life. If you only operate pre-market charts, you will never, ever see this system. Ever. Right? Now, here's another tidbit. you still need your pre-market and after hours data charts. Why? Because look at this example. Like we said, it's over the 50 SMA. It's positive. But look at this. Look at it. When the market opens, it's all the way up there. Now, who's to say that this breakout keeps going? And who's to say that it doesn't just open up and fail? Again. So, we know what from this view? That the market went positive. So it's a long break, attempt, etc. Up, trend, start, etc. Sure. So from the break point to the open, BYND is up 46%. If the long doesn't continue, it could very well do what? Magnet back to the 50 SMA and go down and go into a downtrend. So your risk in the event this long breakout topped, failed, then wanted to back test trend or even go into a downtrend, your risk would be what? 27% down or something like that. Right? Okay. So how effective is it now to use this system without a pre-market chart? It's still effective, but if I do use a pre-market chart and I also use a regular trading hours chart like so, I am seeing the SMAs that really like to control things. But they like to also control things in the pre-market around these levels. So what do? We use a regular trading hours and we also use a pre-market. And what we do is we make sure we know where the SMA calculation is in the pre-market chart as well. So what do we do to do that? For me, I just like to put a price point right on that SMA. And then go, okay, let me turn on my pre-market data and see where that's at. Are we above it or are we below it? If we're above it, we're breaking out. Are we below it? We're not. So look at where the yellow line's at, BYND, right? So overnight, what do? They pop it up to trade it flat. There's your back test, and there's your long. The market opens up 27% above the breakout level. But the system accepts the breakout, and the system accepts the uptrend start on BYND over the 30-minute, and we take that puppy up. So if you bought at the open, your risk was 27%. If you held the entire way, which obviously most people would never do, but you have 133% gain. So that from 27, that would be 4. So that's like almost a 1 to 5 risk to reward on that. Okay? Now, if you had bought at the break, so let's do that. If you had bought BYND specifically at the break, which I did not do, I was not on it that quick. If you'd bought it on the break, which we've now taught you, which would be over the 50 SMA. So if you bought here right in the morning at 87 cents, that's 187% return. And your risk was 16%. If you had bought on the back test of this candle, so if you were watching BYND in the morning and you saw it broke out and it's going positive, you already know there's the potential for an uptrend start. And you know two things as well. Things can only go up and they can only go down. So if BYND, you saw it that morning, breaks over SMA, it's starting uptrend potential. Can only go two ways, up or down. All right? We know what? For it to stay in an uptrend, it has to stay above this level. So if it starts to go down and it holds that level, great. That's a back test and a hold. All right? So if you got long at the back test, which is down here, you got in exactly at the back test of the start of the uptrend. Profit potential, 237%. Risk, what, a penny, 2 pennies? So what's your reward? A 1 to 200? In theory, even though it's not, because you'd probably stop out below the 50 and it'd probably break a candle down more than a penny or whatever, or 5 cents. So we'll call it a 1 to 180 risk to reward. Wait, that doesn't make sense. Maybe it does. I don't know. But either way, you get the point. The closer you can be involved at the start of the uptrend, the lower your risk, the higher your reward. So that is how you basically know when things are changing trend. All right, we're all done there. That's what you needed to know to get up to speed on that. And now we'll go look at the market. Cool. Below 10 SMA. So cool. No big deal. I'm still holding some UPRO long right now. Haven't closed out that position. By the way, just remember yesterday too, I said I locked a little bit of profit on the longs on UPRO up here. Why? Because we're in a back and forth market. And then the market will not trend out until it takes out this range successfully. So yesterday we, well, kind of started taking it out, but it's kind of lackluster. So that's just a rule of mine. When I see that we're in a back and forth, sideways, choppy kind of market, I don't overstay positions as long because it's just likely that the market's going to keep scheming until it doesn't want to scheme. But anyways, yeah, that's currently one of our potential pullback targets for the market right there, that box I'm putting on the screen, and a current support level over under as well. So if we fall all the way down there, kind of expected, you know, because it's just what happens. I don't think we're going to necessarily do that today, but it could happen. Yeah, and how is that going to happen? Well, the VIX has to basically keep going up, for one, and then what else, right? The market internals, which we haven't talked about today, but again, look at the market internals. So this is another thing. A lot of people just come in, they just look at stock patterns and go, oh, I think it's up, I think it's down, whatever, right? But when we come and look at the market internals so far, look at pretty much nothing's been bullish. Everything's actually just been kind of like flat. The only thing really moving down is the NASDAQ. The FANG names, Magnificent Sevens, they're pretty much just trading flat and sideways. Hold on, I got a call from one of my accountants coming in. Be right back. Hey guys, I'm on the phone with my accountant. I will be back in just a second. Okay, sorry about that. Back on here. VR back on. We are back here. Bitcoin is going up. Not really surprised. Again, we hit the weekly VWAP there. We hit daily VWAP support here, or resistance, pulled back towards daily VWAP support. Now it's a matter of if the market builds a higher low here and then breaks above that. If so, we're going into the 116s, 117s. So we'll just see how that develops over the next day or so. Alright, we'll delete off all that. Yeah, I'm just looking around some other stuff. What is this? I do not remember using that. What's that? Yeah. Oh, I see. I see. Yesterday's high low, so we pulled back to the 50% retrace of yesterday. Gotcha. Back to 61.8 of yesterday. There. Cool. Huh. Yeah, I don't know what this drop is, but it looks pretty scammy. I don't trust this dip by any means. When I say this dip, I think this market's going to get bought up right now. Well, right now, just in general. I don't know. We'll see, because, I mean, it's debatable. Like I said, if you look behind the scenes, I mean, everything's kind of bouncing right now besides the Magnificent Seven. So that's the only reason the market's not going up right now, for the most part, is the Magnificent Seven over here. These things are kind of lacking. See how it's kind of up and just grinding lower. So these have to stop doing that, and then ultimately the market's going to bounce. Or vice versa, these don't end up bouncing, and then we just kind of keep doing this slow, lackluster kind of grind to the downside / sideways on things. But ultimately, you'd assume that once the fangs slow down there on that sell stuff, then we should pretty much bounce the market. Yeah, I mean, like I said, I don't really have really no big plans for the markets right now on this day. Kind of just sitting back, hanging out, looking at emails, making sure things go smoothly with our transition to our new kind of software and company hosting site. Yeah, let's just Oh my goodness. The market is starting to bounce, guys. That's crazy. Where is where'd that thing go? That's weird. My market internals page is like just disappeared. Where's that at? There it is. Oh no! Is the market gonna hit a little bouncer magoo here? Maybe. Again, the FANG, couple little greens there. I mean, again, the NASDAQ is rallying, NYC is rallying, S&P is rallying. The only thing that needs to pick up pace here is going to be the FANG, Magnificent 7. Once they do, market bounces, everyone's selling into this, probably gets pushed up a little bit. So we'll see. Still some time there. Doesn't look, I mean, the patterning, everything, I mean, I look at it, doesn't look like great by any means. So it's really just a matter if the Magnificent 7 perform or not. If they don't, then this is just going to be a lackluster market for right now. Another red candle on the Magnificent 7, so down goes SPY, down goes Qs. When I say down goes, it just means that the market in that exact moment will not be moving bullish because, again, it's pretty much nearly impossible for the markets to put in a green candle when your Magnificent 7 put in a red. So we just put in a red, so obviously you saw 1 minute pullbacks on Qs, 1 minute pullbacks on SPY, etc. Again, so whenever you see a red, one red candle, two red, anything on the Magnificent 7, you know, almost guarantee the market is not going up in that exact moment. It needs to change, but either way, so we're in a macro long bias environment. Right now, the equities markets aren't running significantly fast or significantly strong to the upside. That could change, but again, we are in a macro long bias environment. The market is just dipping on the day. Until the VIX breaks out, we're not bearish the market. Until the market breaks down, we're not bearish the market. We're only bearish the market if every single market internals page is selling off the face of the earth. Are they doing that? No. So it's still a macro long bias environment, dip long up till proven otherwise. And if we really want the markets to kind of cook to the upside, we want to get the price above 671.42. If we can get that price over 671.42, that would be ideal. That's the pre-market 30-minute VWAP high. And we just, looks like we just put in a 15-minute there. So now the target is going to be up to 671.55 here, over that pre-market 30-minute VWAP, which we're hitting right now. So if we can clear pretty much 671.39, price should go straight up into 671.55. I think. Let me just double check some other stuff. What about this guy? Nothing there. Cool. Yeah, I don't see anything there. Yep. Yeah, so 671.55 coming up. Holy smokes, who would have thought? Crazy. It's a dip long market. No way. Remember how you stay on the right side of the market almost every single day? By following the SMA system and knowing that the market is not full bearish, right? So we already just everything you're seeing in real time right now, it all comes from everything we always discuss every single day. Is the market positive? Is it negative? Is it positive? Is it negative? Right now it's positive, etc., etc., etc. So what's going to happen? You're most likely in a dip to long market. The only way the market will go down, down, down is if what? Is if the volatility index breaks out. Or what else? What was the other thing? If the market internals for the day are all bearish. Are they all bearish? No. They're actually bouncing and going up, bouncing, going up, bouncing, going up. And then the FANG, the Magnificent Seven, is what was dragging us this morning. Those are starting to go up a little bit. So market's not going to go down. Is this all easy to read in real time? And no, it's still a challenge. But again, like we said, you're in a macro long environment. The macro long swing move started last Friday before the close. Here on this stream, at CNBC, we will flip bearish when the volatility index breaks out next, or when the market breaks down. Till then, it remains a dip to long market, and it's your objective when something is dipping to identify, is this the start of an actual sell move or is it just a dip? How do we do that? Look at the VIX. Is the VIX going into a long breakout uptrend? No, it's not a true pullback. Are all the market internals just selling off the face of the earth? No, it's not a true pullback. Then what is it? It's a dip. And then it's a long. If all of I said is just true. All right, so we've gotten that target, and now we got a 5-minute untested, which basically means the market's going to hold on. So yeah, pretty much on the 5-minute scale, the next thing is we're going to go up to 672.06, or vice versa. We'd have to pull back here to the 1618. So whatever way the energy wants to flow in the universe here, be my guest. But those are the two options based off that 5-minute current setup. I'm actually going to lock a little bit of profit on this long right here, just because why not? Buying into the dip on the day, going to sell a little bit on that high because I've made a good trade there. And yeah, so pretty much those are our two options where the arrows are pointing. Obviously, I hope it keeps going up because then I just make more money faster. But if it goes down, it's all good because that's just the way the universe works. Behind the scenes, what's going on? Oh yeah, remember what we were talking about the VIX this morning? Whoa, what the hell is going on there? All right, so remember what we said about the VIX this morning, right? What did we say, guys? What did we say? Not what did we say, what did we teach? What do we teach? We teach what? We teach how the market's going to move. And it becomes a little bit easier when you just realize it can only go up, it can only go down. And when you understand where those levels are at, you realize that the markets are just going to go up and down between those levels. So what did we say? Remember we said, right now we're on the 5-minute today with the VIX. So what are our options? Our options are either to break out and go to the 10-minute, or we're going to fail to break out and do what? Go back down to the 5-minute and then break down the 5-minute. And so you can basically see the exact pictures I've drawn are the exact things that happen in the market. Why? Because again, it can only go up and it can only go down. And it can only go up between SMA levels that algorithms control, etc. You know what I mean? So, cheers. Hope that makes sense. Alrighty. Cheers, everybody. Cheers. Let's double check our 1 minute here. Throw on some VWAPs, go to this low. Throw on some VWAP there, go to that low, cool. Anchor this low, cool, nothing. Then we got anchor the breakout. We're testing the breakout VWAP right now, I think. Yeah, there's a breakout VWAP, so that will prevent the 61.8 from hitting if we hold the breakout VWAP. And if we don't retrace the 61 there, then we're gonna go straight up to the 67.1. So we're still theoretically on track for this target here with this 5-minute holding pretty much where it's at, which is where I'm drawing, I guess. So as long as you're over there, you can still run up into that 61.8, like I said before. We would like the Magnificent Seven to start doing something, though, but they're not. But again, that just is what it is, right? Like, this market would be moving so much more aggressive to the upside if we were actually getting performance across our major market cap stocks. But since they're not really performing, Well, I mean, they're doing okay. But like I said, like since they're not really performing and the market is moving off the backs of all the other markets here, it's kind of one of those things. Like if we really want this market to cook, we need those to pick up pace. Right now, they're not. Can you show again the settings for the 5, 15, and 30? The settings are just, the settings is a 5-minute, 15-minute, 30-minute, and you're just using 150 SMA. That's it. And you need to make sure your chart does not have pre-market data. That's it. So you're just using a 50 SMA across every single time frame in theory. And you're just turning off your pre-market data, and you'll have those exact levels. And it's literally just when price goes above 1, uptrend starts on that time frame. Right? So if price goes above the 1 minute, 1 minute's positive, 1 minute's uptrending. From there, what can that chart do? It can only go up or down. So what's it going to do? It's either going to go up to the next time frame, which would be a 2-minute, 3-minute, 4-minute, 5-minute, or it's going to pull back to the 1 minute. If the 2-minute breaks out, what's the 2-minute going to do? 2-minute can only go up to the 3-minute, or it can only pull back to the 2-minute. If we break the 3-minute, it can only go up to the 4 or pull back to the 5, etc. Right? That's how the market moves through SMAs. All right. So we have failed our breakout volume weighted average price. We've now hit the 61.8, et cetera, et cetera, et cetera. Got it. So like we said before, there's your, whatever I just said. I don't even know, your breakout VWAP. So that's where the market would have to hold to go up, fail, break, down. Now what? We've traced all the way down to volume weighted average prices off low. So this is all still pretty common stuff, right? So what do we have? We had a long move up. Ran out of steam, sold all the way down to volume weighted average prices off that low. And also, what did we say? Unless what? The Magnificent 7 pick up, then this long will struggle. What are they doing? Not going up, like we said. Again, so this is all readable in real time. You just have to have all the tools in front of your face to arguably do that, right? All right, let's go back to this 15-minute real quick. I'm just going to delete some of this stuff and just kind of restart. I'm going to get better at doing this too. I need to get like more organized. I'm terrible with organization skills, but so we still have a 61.8 level here that's untested, so arguably continuation down here. That would be likely. We'll see. What else do we have in there? 5-minute. Well, 1 minute. Don't see anything on the 1 minute there, but either way. So counter pop levels are going to be back to here and down. Oh, another phone call. Beautiful. Hold on 1 second, guys. Alrighty, ladies and gentlemen, boys and squirrels. Again, like we said, we just had a nice little dip long up there. Market shaking down. Wasn't really on top of this kind of pullback move to a degree. I can't really say it was really on top of that, but it makes sense. Like I said, what do we always talk about? I mean, I do repeat this stuff every day, and it's really just in an effort so that you guys will understand it, and you can just move in flow with me during these streams. But what do we have happening over the past, since 9:22 in the morning, the past, 8 minutes? So for the past 8 minutes, what were the major market cap stocks doing? Going down. All right. So let's look at the last 8 minutes of the trading session here. That would be from this high to this low. So from the top to this current low in the market was 8 minutes. And the last 8 minutes were down on FANG, Magnificent 7, etc. All right. So like we always say, it's pretty hard to see and get markets to go up and stay up without continued performance from the major market cap stocks. Now, I know somewhere out there, someone in the world is going like, look at my inverse cup and handle, right? But the reality is just we were just selling off huge market cap stocks there. So as a result, the market is reflecting and repricing itself accordingly. It had nothing to do with your head and shoulders, bull flag, this or that. Bitcoin, let's see, Bitcoin. Yeah, Bitcoin is still just really in between the zone of the dailies. So right now, Bitcoin's essentially just going to be swindling either these previous shorts or these dip buyers here. I mean, I couldn't tell you which for the moment. I mean, I could look at momentum and be like, oh, well, momentum says this and I think that and blah, blah. You know, it's pretty straightforward. If we go over this VWAP here, we're going to have one of two options, right? So I always like to think of market can do one of two things. Obviously, it goes up, goes down. Then you can have your bias. But as long as you always think it's going to go up, it's going to go down. I mean, blah, blah, blah. So this is pretty much what's going to happen. If we break out the current resistance here, the market is just going to go up to here. Vice versa, right? When the market breaks out, what's it going to do? So it breaks out, what's it got? It's got two options. Either go up to there or pull back to here. And then go up or fail. So there's three things, right? You can break out and go, break out, pull back, go, break out, fail, right? So, I mean, that's it. I mean, it's super simple in that regard. But yeah, I mean, it's either just up and into here. So that's basically our next long situation is up and into there with acceptance above, right? And then arguably resistance down again, right? Every single VWAP level is always a long target and resistance start. So if we're looking at VWAPs down are always sell target, support start. If we're looking at VWAPs on the high side, they're always long targets up and resistance potential starts, right? Just like this. What was our support for Bitcoin? That low. What was our long target? Right there. What was our next start of resistance potential? Right there. Okay? Where's our next long target? Up here. Where's our next potential resistance start that's meaningful to us? Right there. So your long targets are resistance starts. Your sell targets are support starts. We don't look left at the chart and go, oh, someone bought here before, so that's support. No, not it. All right. If this is resistance up here, right? If that's resistance, so if we go horizontally, go that's resistance, then why did we just have resistance prior to it? We do not look left for resistance or support. Pretty much ever. So, right? If you looked left, right? So if we look left, where was support in this chart? Oh, there and there. Well, that broke down. Where was the next support? Well, maybe was it that blip or what about that one there? None of those lows worked. We created the low right there. Below everyone's support here, below that support, and above that support. So if you were buying here, arguably stopped out, right? If you wanted to buy this one, stopped out. If you wanted to buy this one, you never got it. But if you followed the Boiler Room Network, you picked that exact low. Was it luck? Probably. Don't know though. So think about that, right? Literally, what is going to be the #1 pushed video on YouTube, #1 pushed content for support? Look left, find lows. Plot them sideways. That's your support. Look left, plot horizontally. Look left, plot horizontally, etc. Whatever, right? There's your support. You never hit that one. You went below that one. You went below that one. This one was the best one. But arguably, that was the most unrecognizable support. If you were literally looking left, right? So let's do that. If you looked left at this market, and you go, that's support. I mean, granted, if we threw the Anchor VWAP on there, I actually think that support comes in very close to where our VWAP did. And even my VWAP didn't hold perfect. It kind of slipped through a little bit, so I don't want to say it's perfect. It did slip a little bit, but if we compare, let's see. So my support for Bitcoin over the past week was here. That blue, green, I'll make it green. So this was my support for Bitcoin right there, all right? Let's go into the daily chart, right? So if you're looking at the daily chart and you're looking left, you're like, all right, support, those all broke. This one broke. That one never hit. Even if you looked at the weekly chart, look at the weekly chart. Weekly previous dip broke, never goes down to the previous one here. So exactly, right? So remember, the number one pushed video, if we look at, so you obviously know that the number one pushed videos on YouTube and the internet and most trading education websites, they will say, look left for resistance or support at previously what happened in the chart. That can give you an idea of where it will be at in the future, right? I used to think like that. Now I can't tell you the last time I ever looked left on a chart for support or resistance. I don't even think of that anymore, right? But somehow those are all the, like we said before, how they tell you to put on pre-market data. That way you'll probably never look at a regular trading hours chart, and then you'll never see those right SMA calculations. Same thing, look left at a chart, look here, don't look here. So somehow the most popular videos on YouTube for support are all teaching you to look left. But again, after 10 years, I found out that's pretty much exactly what you don't want to do. So, yeah, I mean, that's pretty much it. We do not look left, really, for supports or resistances. So, if at any point you come across a video on the internet that says that, I mean, I hate to say it, but just don't watch that video. No point. It's going to lead you astray. Oh yeah, remember what we said about the VIX? What's it going to do? Here's the 5-minute trend. What's it going to do? It's either going to break down and just go, or what? Or it's got a back test. There's your back test, right? Again, markets can only go up and down, and they only go up and down through key SMA calculations as it relates to trend identification. And then from there, they can only go up, down, and of those moves, it will be either moving to the next SMA or back testing the previous one just broken, right? Also, the market's getting picked up again. It's going up. Sorry, I am not looking at my market internals, but let's take a little McGander here. What's happening? I don't know. Maybe. Oh my goodness, who would have thought? Look at, you have 1, 2, 3, 4, 5 green candles in a row on the major market cap stocker magoos. And what is happening to the market? Let's take a little peek. Can anyone guess? Is it going down? It should be going down, right? If all the major oh no, it's going up. That's crazy. So we had 5 green candles in a row on the Magnificent 7. We have 1, 2, 3, 4, 5 green candles in a row on the SPY. Who would have thought? All right, let's take a look at the NASDAQ. What do we got here? 1, 2, 3, 4. Oh my goodness. It's like it actually makes sense. But make sure you look left on your chart, guys. Make sure you look left. Make sure. Oh, I love myself sometimes. But not all the time, just sometimes. What's gold doing? Oh no, gold, don't do it to us, baby. Is that an exhaustion gap? I really hope not. Either way, I guess it really doesn't matter at the end of the day. It's not like if I sell, it's going to really change my life all that much. It's not like if I lose all of that money that my life's really going to change that much, so doesn't really matter. And at the end of the day, you can't take gold or silver with you to heaven or hell. You can't take your house. You can't take those cool Jordan shoes you keep buying. I don't buy Jordans, but you know. So pretty much just remember, everything you have in this life will not go with you. And always keep in mind, if you're one of those people like me, it's better to try to your best to stack your treasures elsewhere, not on planet Earth. Get what you need while you're here to sustain yourself, but hopefully you can sustain yourself for eternity elsewhere. Don't become too tied to the things here on Earth. And again, they're going to vanish before you know it. Same guy. Bro, I emailed you so long ago. Well, maybe if you would check your emails once every year, you would know I emailed you to get you in the room, Skipper. Oh, boy. Oh. Okay, that's good to know. I'll just have to do that later. I don't get time right now. Yeah. Again, I don't really have a whole lot to say here other than, markets are still dip long. We're just in a long bias trading environment, though it may not be necessarily an easy flowing day. Remember too, guys, what do we always say? Generally speaking, the easiest longs will come shortly after what? A buy signal. Where did the buy signal happen? Or where did the trend change? Or where did the long operations start? Where did the algorithms flip from bearish to positive? Let's show you. We take this pretty little blue line. Well, let's go to the SPY actually and do this because I want to do it there more so. We're going to take this pretty little blue line. Or I don't know, but you guys know. Thinkorswim, TradingView, all going slow this morning. Can somebody fix AWS? I don't think it's really that, but TradingView is always slow. All right, so like we said, longs generally tend to be the easiest or have the easiest movement shortly after a long operation algorithmic flip happens in the market. Right? Let's rephrase that. I'm going to go run a 5K. When will I have the most energy? At the start of the race. Right? So, where was the start of the race for this long move? Right here. When did that take place? Over the green line. So, race start. Point. Long. Wham. Right? Some people probably take profit. Dippy. Still long. And when I say still long and this starts to... That's the other thing too. It's kind of funny. Because when we're in buy signals, there's many times where I'm like, hey guys, it's a long market. And then the market's like... Right? And when it does that, this would be when we have our VIX, right? Or the market internals, which I'll call MI. Like the state of Michigan where I live. Don't dox me. I already doxed myself, I guess. VIX. Right? So when I'm like, hey guys, the market's in a long, it's a dip long market, and then you see the market not go long and it goes down, that's all a part of the plan. Theoretically. Why? Because if something's in an uptrend, it either has to keep going up for forever, it has to pull back, then continue to go, or it eventually will have to go into a downtrend. So for every long bias trading environment and buy signal, it will eventually end. And for every bearish selling operation, it will eventually end. And it will change. We notice that change start to happen when the VIX signals us, or the market internals signal us. So you'll hear me say it's a dip long market, it's a buy signal market, it's a this is that. And then occasionally the market will go down on the days that I'm talking about that, right? When that happens, it's because we're starting to see signals changing in the market, even though we're still on the positive side of trend, right? And we always say, what are those indications? The volatility index and the market internals, okay? So whenever you hear me say, hey guys, we're in a buy signal, it's a dip long market, and it does not go up, the first thing you should think in your brain is obviously my voice saying, what's the VIX telling you and what are market internals telling you, right? So if you ever come in and we're trend positive and then it's been going good and then all of a sudden it's not going so good, first thoughts, go look at the VIX, see if it's entering a buy signal. Second thoughts, go look at the market internals and see if they're just basically falling off the face of the earth. If so, you have your exact reasons why your buy signal is slowing down and doing the opposite. Because basically its brother and sister here are beating it up. All right? The SPY, the VIX, and market internals are siblings. When that brother is performing too well, the VIX and the market internals sometimes get a little jealous. And their jealousy leads to anger. And then it leads to action. And their actions are what? VIX breaks out, market internals go down, and we take our brother's happiness and make him mad. Okay? That's what happens. They're three siblings. And if the SPY does too well, the others get jealous and they try to knock them off track. Then, when the SPY gets knocked off track for too long, it becomes a little defensive. It gets mad and it starts to fight back. And then what happens? The two little younger siblings, market internals and VIX, they start to become a little fearful of its brother. And then what do? The VIX breaks down. The market internals get boosted up, etc. And it's just a rinse, repeat cycle for the end of eternity. If I make it to 80, I really hope I do. I don't think I will. I've rode this body pretty hard in my younger ages with partying, to be honest. Kind of surprised I'm still alive in a way. But anyways, that being said, I'd be surprised if I make it to 80. So maybe not for me, but maybe for you guys. So yeah, this is going to repeat for like the end of eternity. Okay? This system that you're seeing, it's going to rinse and repeat till the end of times. And or till the Messiah comes. Alright? Which I guess would be actually no, when the Messiah comes, it's not the end of times. That's when the 1,000-year reign starts on earth. So realistically, and that's another thing too. When you die, theoretically you don't actually go to heaven. Because Judgment Day hasn't actually happened. So if everyone's supposed to be resurrected from the dead for judgment, then everyone who's dying is just really actually in limbo. So when people have near-death experiences, right, and they're kind of like in that, I thought I met God or I went to heaven. No, you're probably just in the presence of extreme energy, right? And your body has just become one with universal energy until Judgment Day. And then you're brought up from resurrection. Anyways, I'm going a little off topic. That stuff's kind of fun to talk about for me sometimes. But anyways, so yeah, this is going to go until the end of times, pretty much. And so, yeah. So as we said, Yeah, I guess I don't have to say a whole lot more. You guys already got it all down. You guys are perfect at this. The only thing we need to do is just essentially spread the word to help more people. Which so far is proving kind of challenging on these streams. How long have we been streaming for now? Back to doing streams on the old internet. Also, can anybody assume what the news is like? Do you guys think the news is bearish, or do you guys think the news is bullish right now? What do you guys think? Let me know in chat. And do not go look at, like, honestly, be honest with yourself. Do not go look at the news. Look at the market. Understand you're in a buy signal. Go look at the economic calendar first. Okay? So look at your economic calendar. See what was talked about today. Okay? And then look at the market. And then make your prediction on the news. I didn't even look at the economic calendar today. I don't even know what's going on. But I just said it was going to go up. And so far, we're pretty much going up, right? Why? Because duh. Like, obviously. You know what I mean? So, go look at the economic calendar. Look at the market. You know you're in a buy signal. You know that the probabilities you go up, unless the siblings, VIX and market internal, start to get annoyed and they want to change things, we're going to go up. That means things are going to be bullish. That means stocks are going to put on gains. That means the news is going to do what? Try to sell you a reason why the market is up, other than the simple fact that we're just in an uptrend and we're supposed to be going up. Okay? So, have fun with that. You don't need to post it here, but just do it for yourself. See if you can predict what the news is going to say. I'm going to do it right now for myself. Let's go. Economic calendar for Market Watch. We had, it's Tuesday, Fed Governor Christopher Waller opening remarks at 9 a.m. So the news could make remarks about Fed Waller there. It's the only economic kind of thing that I said. Or wait, is it Wednesday? Am I? No, it's Tuesday. There's that. Is it earnings season? Like, sometimes I don't even pay attention to that anymore. Like, because I could care less. Like, is it earnings season? Like, what stocks release earnings? I don't know. And if it is earnings season, they're probably going to say stocks are putting on gains because earnings season. Yes, it's earnings season right now as major tech companies are releasing their quarterly reports. So, yeah, there we go. What stocks are releasing earnings today. All right, so several companies. I could go to marketwhisper.com. It's been a long time since I've used that. Marketwhisper.com. Earnings Whispers or market. It's earningswhispers.com. Oh, free trial. What is this? Get off me. Why would I stop it? No. Don't want a free trial. I just want to see what's going on today. We require cookies. Sure. Well, this is trash. They used to be good, but now they're just trash, it seems like. Yeah. Anyways, news is probably going to say something like stocks put on gains because of earnings. So, I don't know. But let's just go see if we can pull it off once again. So, it's either going to be Fed Wall or his remarks. There's going to be something about the earnings. They've been talking about China. Maybe it's government shutdown stuff. But there's only a handful of things that could really be. So, stock market news today. All right. Stock market Dow, S&P Flutter. Flutter? What do you mean? They absolutely moonshot. Whoever's at Yahoo should be fired. Dow rises 200 points on the backs of strong Coca-Cola 3M earnings. Oh my, who would have thought? That's crazy. Like, duh. Stock market today. Dow edges up after earnings reports roll in. So it's got to be the earnings, guys. Has to be the earnings. Couldn't be anything but. Dow and S&P jump as lead tech stocks higher ahead of busy, I don't know, earnings? That's crazy. That is just so crazy. Oh, yeah, I know I was just reading that, but you guys didn't actually see it, but here you go if you actually want to see it. Like right there. I actually didn't even really know it was earnings seasons. I just know that they've been talking about it a little bit here in the news. Again, I haven't paid attention to any of these stocks earnings. I mean, not that it's not important. It's just not something that I naturally do or need to do to predict how the markets are going to move. I don't have to look at the news to know how the markets are going to move. I don't need to look at the earnings to know how the market is going to move. I don't need to read about Bitcoin for how it's going to move. I don't need to go to Crypto Ash's Twitter where he's talking about head and shoulders patterns to know what's going to happen to crypto, right? It's just, you don't need it in theory, right? So I just know that they've been talking about earnings for some time now over the past week and a half. So I figured with the markets going up today, this is probably what they would attach it to, since there was no big economic data release. There was just one Fed speak. So, you know, what was the likelihood that they attach it to the Fed speak versus earnings, right? And haven't really heard too much about the whole China thing over the past couple days. It's kind of faded out of the news. So they probably weren't going to attach it to that. That's kind of old stuff. We used that China whatever for the sell signal the other day. So just, again, the way that I rationalize, and the best way to rationalize, is the market till the end of times is going to go through buy signals and sell signals, and algorithms are going to run the market. In the future, it's going to be mainly AI that runs the market, as far as, like, you know, the people have money to spend on that. But so for the end of times, the markets are pretty much just going to go uptrend, downtrend, uptrend, downtrend. And for the end of times, the news will just report on anything they possibly can for that day to give you a reason why it's going down. But it's simply just uptrend, downtrend, uptrend, downtrend. That's all it is, right, guys? It's really all it is. Yes, the earnings do affect the market, right? The market does go up if those stocks go up. So if the earnings are well and these stocks go up, then yes, the market's going to go up. So there's truthfulness in the news to a degree. But, for example, any one of these stocks that they say are going up, right? If the market was in a sell signal, those stocks could still be going up, and the market could still be going down because we're in a sell move, right? So when they say, oh, stocks are up because of earnings, well, if we were in a downtrend, or where the markets are roaring because of earnings, if we were in a downtrend, you know, a lot of those stocks wouldn't be going up. They'd actually be going down because the overall system is down. Or a handful of them would actually be going up and the markets would be going down, right? So again, it's the system that controls things, right? And it plays a role in the sense that stocks have to go up for the market to go up, but also stocks lean very heavily on the algorithm that's on the system that's on the market. So a lot of the eyes of computers and everything literally look at the S&P 500 and the SPX, and they go, is this thing positive? Yes, buy equities. We don't go, let's buy equities trying to get the market in a buy signal. That's not how that works. Obviously, if things sell off and then people say, oh, the market's oversold, yeah, we'll start buying. And yeah, maybe we'll start buying equities because things are oversold. And then hopefully it goes into an uptrend, right? But when we get into an uptrend, the algorithms will flip and go, okay, long equity, long equity, long equity, long equity, long equity. And then it's a self-fulfilling prophecy in that sense. So anyways, that's how you predict news. Again, because it's not hard. It was hard. It was extremely hard for a long time because I didn't know how markets truly acted. You know, I could map penny stocks off and resistance and kind of get a feel for when they're going to top and who's got momentum and stuff, but I had no clue about, like, SPY and QQQ and, like, really how this thing moves. I mean, one day you look at it, it's up. One day you look at it, it's gapping down huge, and then it's back up. You're like, this is the most erratic thing on planet Earth. How does anyone trade this? How does anyone understand this? And then fast forward 10 years and it's like, oh, duh. Like, obviously. You know what I mean? Like, oh, like, obviously the news is bearish today. These guys don't know that we're supposed to be down, right? And then, you know, so it's just fun. That's a lot of fun when it kind of comes full circle and you can kind of figure out how they're going to report news and things like that. At least I think it's fun. Holy crap, the market's going up. Like, again, who would have thought, right? Those earnings must be killing it today. Must be really killing it. Oh boy. Alright, I gotta go through my email. We got a lot of stuff going on. Did that person buy my house already? Please buy it. Just be done with this. What's the news? John, did you just enter the chat like 10 seconds ago? Or have you been here? Because if you've been here, we just went over all the news. If you just walked, so you just got in, okay. I would honestly say just take the stream and go back 10 minutes or so. Maybe a little more than that, and then you'll just see everything about the news. Yeah, I promise you, just go back a little bit in the stream, and we'll cover the news. We'll show you how to predict the news and everything. 100%. So you asked the question there, what's the news? Why SPY keep moving now? And so I hate to say it, but you are a picture perfect example of what we were teaching. Not like nothing against you. I'm not saying in a bad way, but you are the perfect example. It was almost a godsend you just came into the chat and said that. Because you are the example of, we here do not look at the news to determine why the market is doing something. We use levels that will determine when the markets are going to go up and when they're going to go down. And as a result, the news will follow what we do. From there, we can look at economic calendars to see what's coming. And basically, so right now in the universe, the only thing that's happening today is a Fed speak from one guy on economic data. That's it. Right? So the news has no economic data to report on as a reason why things are moving. What else is going on? Right now it's earnings season, which I really kind of didn't even think about till just today, to be honest. So right now earnings season is going on. Since we know there's no economic data to be presented on, and the market's going up, and Trump maybe, I don't know for sure, but Trump, did he tweet today? What if I get a Trump to make it? That's another thing. That does count, but we haven't, I don't know. I'm not on Twitter, but did Trump tweet today? I don't know. That's something they could report on, but if he hasn't tweeted, then that's not going to happen. So what else could the matrix, what else could the system possibly give to you as to why things are going up? Earnings seasons. Right? So we deducted all of that and then said, what's most likely? They're attaching this long bias move today and yesterday to earnings. Go look at the news, and that's exactly what the news says. So you can kind of use deductive reasoning to get to where and what they will be reporting on, because there's only so much they can say, right? They can't say the market's going up because the moon's falling out of space, right? That makes zero sense. They can't say the market's going up because the sun rose. Well, yeah, I guess they could, because if the sun didn't come up, then that'd be a big concern. But you know what I mean? You can't be like, oh, market's going up because I gave my kid food today. No, the markets are going up only for a few reasons. What are those reasons? Well, earnings, economic data, whatever, right? So just go back 10 minutes, watch that whole series in 15 minutes, and you'll get it. You should perfectly understand it. And really what it is the markets for the end of time will go through buy signals, uptrends and downtrends. The market will go up, the market will go down as we use that algorithm change in the market. Right on my screen, right here where I'll point this arrow, that's where the algorithms flip long. So the other day at the end of the close Friday, I got long, we're all getting long. Hedge funds, banks, algorithms, we're all trying to flip the markets long. We successfully did that. As a result, stocks are going to go up. Equities are going to go up. Behind the scenes, what's happening right now is earnings, right? So a couple days ago, the people in the know flip the market long, we rally it up. Stocks go up, earnings come out, etc. The news will tell the public that the market's up because of earnings, not because we had an algorithm change in the market and now we're just going to try to go long. That's all it is. Markets go from uptrend, downtrend constantly. And what's going to happen is the news will attach whatever they can to whatever's going on to tell you that's why things are up. But the true story is we just naturally move markets from uptrends, downtrends. Algorithms will force stuff up, force it down. We trade in that direction. As a result, equities go up. As a result, people at the news organizations like Yahoo Finance and go, well, there's got to be a reason. There's got to be a reason. So what are they going to do? They're going to go, oh, is there any economic data today? No. Oh, well, we can't report on that then. Oh, there's earnings today. Oh, that could be a reason why. No, it's just we literally just move the markets up and down. And the people at the news organizations, they have no clue. They just have zero clue what's going on. That's it. And, you know, if we ended up taking Yahoo Finance or Market Watch and telling them the market just moves over one SMA, then, and they start reporting on that, then their news organization is no longer, probably, right? If the major news organizations like CNBC and all these people really just started showing you that the market just goes up and down based off an algorithm level, like literally one level for the most part, then their news organization won't last very long. A, because they'll never have an article to write about. But B, because the powers would probably be like, see ya, Yahoo, bye-bye. You stopped reporting on the false news articles. You can't have that. Nah, I'm kidding. Who knows for sure, but that's always my little superstitions. So anyways, it's 11 o'clock. We've already had a great day here where we pretty much kept everybody on the right side of the trade and market all day long as we normally do. So cheers to that. So yeah, gonna get ready to rock and roll. I got a couple other things to do today. But final remarks are you're gonna stay on the long. When I say you, we, the market, the system is gonna stay on the long side of the market until pretty much the VIX says otherwise, market internals say otherwise, or Connor says otherwise. So right now it's just a dip long market till stated otherwise. What is otherwise? Market internals or VIX. VIX breaking out into uptrend or market internals fall off face of the earth. If neither of those two happen, dip long continue. News will be bullish because earnings or whatever else. Okay. Have a good one. See you later.